Hello guys and ladies, good morning to you. In this video I'll explain actually how to trade futures using Binance or any other centralized exchanges. Always make sure to have a proper understanding on how to trade futures and how the trading works before you started the trading. It's very risky trading, but there is huge earning opportunities, and also if care is not taken there is huge loss that is incurred. It is more riskier than spot trading in cryptocurrency, so make sure you are experienced enough and you understand how it works. In futures, you can use the signals. If you don't know how to trade the futures, you will stop in ending in losing the point, and the person that know it well, you will use the same signals and he will get massive profit while you earn a massive loss. So that's trading, so you need to understand it. Open your Binance. As you can see, go to futures. I already have futures. This account is for tutorial purpose, so let me cancel everything. So as you can see, let me introduce the futures environment for you. In futures, when you look at the top, to show you this is the name of the assets. Now we have USDM futures. You understand, these are future contracts that are denominated in USD, that or in stable coin USD or BUSD. And this is coin and futures. These are futures contracts that are denominated in underlying assets, which is cryptocurrency, not only stable coin. This is option trading. Yeah, for those that are doing option trading. So on here, we are not going for the options. We are going for USDM. I advise everyone that's under this tutorial to stick to actually USDM. That is USDM margin futures. So these are futures contracts that are denominated by stable coin, which is USDT or USD. So below, after it, you have the name of underlying asset. All assets under USDM are denominated by USDT. So dot/USDT, BTC/USD. Let's see. This is XTZ USDT. If it is a spot trading, you see XTZ/USDT. But if it is futures, the only difference you can even know by writing it is futures contract is XTZ USDT. There is no slash. Do you understand? And you can click on the underlying asset. You will see all other assets. And I have told you in our previous PowerPoint presentation in VIP groups on the different terms and types of futures. I introduced the theories too, so you can read more about it. I have said that we have perpetual futures contract, we have debt delivery contract. In perpetual video contract, the future contract that actually has no expiration. You can cancel it anytime. They are settled at every point in time. But delivery date, they are futures contract that expire at one point in time. Like these are quarterly contract. That's in delivery date contract. When you open the contract, you cannot stop it until it is time is due. Maybe quarterly, after every 3 months. You understand? Because we have BTC and ETH. These are the crypto assets that are available for actually delivery contracts for Binance. So our own topic here is perpetual contract. It's a type of futures contract. It has no expiration. You can cancel it anytime. You understand? You can close the contract. You can allow it to continue to keep on earning depending on what you are. So that's why, since the contract are settled at every point in time, it can be cancelled. So that's why the only way the exchange can pay those that go for long or short is by introduction of this pondering rate. I will show you what is pondering rate. So as you can see, these are many crypto assets. You see in futures, it's not all cryptos in Binance that have a futures contract. You see, there are selected, these are the selected crypto assets that have futures contract. There are many. At least you can be able to analyze and do whatever you can and do in your trade. Everything you see is denominated by USDT, EPS USDT, GMT USDT, ANC USDT, API USDT, everything is denominated. So this is USDM futures by future contracts. So let me select any crypto that you wanted to analyze to understand. For example, when you look at FTM/USDT, when you look at the side from the right hand side of the futures, you will see the symbol of chart. Click on chart. You understand, it will open a chart of Phantom USDT for you. These are different time frame. As an analyst, you can analyze so that you can know the entry and exit points you are getting. You understand? You can analyze the chart and set your entry and exit points. If you are buying, this means if you are going long. And also here in this 3-dot system, you can check for your trading history. You can see the fees. There are small fees that we are charged when we trade futures. You see the fees here. You understand? And we have also calculator. Before you enter the trade, you can calculate your gain. Do you understand? And other important things. This dot is not much more essential. It's not compulsory for you to use it. But the most important thing you have to know that in futures is a leverage trading. So in this, from the left hand side of the page, you can see cross. So we have to, these are the two types of leverage or margin that we have. We have cross margin, we have isolated margin. A cross margin, I have told you in theoretically what it means, and you understand. The futures contract is using the entire balance of your futures account for trading. Do you understand? While if you select the isolated margin, you only, do you understand, the margin is always limited to the initial deposit that you use in opening the positions. But the cross margin, the futures, the position that you have opened is using the entire balance of your futures contract. This entire balance of your futures contract, it is used for calculating of your liquidation price, and also for your P&Ls, profit and loss. While so this means that when you open a position using cross margin and the asset hit the liquidation price, so this means that your balance, all futures account balance, will automatically become zero. But if you open using isolated margin, only the actually initial deposit that you use in opening the position is the only one that will be returned to zero, but the remaining balance of the futures will remain as they are. Do you understand? So know the type of margin you are using. For example, let me choose a cross margin. I want to trade this asset. When you use the margin, then choose the leverage. You understand? These are the leverage factor: 1x, 5x, 10x, 20x, or 15x, 24x, 30x, 35x, 40x, 50x. Some have up to 100x for BTC, up to 125x, 150x, some up to 200x in some exchange. Do you understand? So the higher the leverage, the higher the gain, and the higher the risk. It means the higher the leverage, the higher the greediness. Do you understand? And the higher the risk you expose yourself. And also, let me say, as a starter or learner, I advise you to use 5x, 10x if as a starter. When you started learning and you are doing well, you understand, you can always check the increase it to 15x, 20x. Do you understand? So the more you are experiencing and you are understanding the norms of the features, you can be increasing the leverage slowly. Do you understand? In your old trade, don't go for higher leverage at once while you are inexperienced or you are a learner. You will end in massive loss, which you can't carry at times. Because even if you have $2,000, you can exhaust it and return to zero within few hours. Do you understand? And also, let me say I use maybe 30x. Do you understand? Maybe 30x. Then click on confirm. Then I use 30x. Do you understand? So what you need to understand also, this is available USDT that I have. Look at it. This is available USDT. I have 9.4 USDT in my futures account. So if I use this 30x leverage, this means that the futures account will be multiplied 30 times. My balance will be multiplied 30 times to open a position. I don't have actually 30 times of this money, but by using this leverage, the futures will amplify my position size to 30x. If I use 20x, it will be amplified to 20x, 20 times. You understand? So maybe then I choose 20x, for example. Then enter the amount of balance you want to use to trade the futures. For example, I want to buy Phantom. Did I want only 25% of my initial deposit? If I use 25% of my initial deposit, do you understand? It will what? This means that I can buy 120 Phantom with it. If I use 50% of this deposit, do you understand? This means that I can buy no, as they said, based on my available balance, the maximum Phantom I can buy, amount of Phantom I can buy is 128 Phantom. This is the maximum Phantom that I can buy. But let's say if I use 30x leverage, 192. Which means that after multiplying my normal balance with the leverage factor I use, do you understand? This is the maximum number. But if I increase it to 50x, let me see, I will buy. And by this means that the higher leverage, the higher your balance will be magnified, and the higher will be your potential gain or your potential profit or your potential loss. So as a starter, I advise you to use a lower leverage, maybe 20x, 5x, 10x. Do you understand? Maybe let's say we use 10x. Do you understand? So, and don't, when you are opening your position, just use either 25, just use 50, don't use more than 50% of your of your position of your balance. If you use either use 25% of your total balance or you use 50% of your total balance, this will help you actually to have your liquidation price lower than your entry point, very distant to your entry point, because the more you use your almost whole balance or close to whole balance of your futures account, do you understand, the closer will be the liquidation price. I am giving you some secret. And also make sure you use the lower leverage. And you have different type of market order. You can set the limit order. Maybe you wanted to buy below the market price. This is the current market price, 1.446. Maybe you want to buy it at 1.35, 1.350. Then you can set limit order. How much balance do you want to use? Maybe 50% of your balance. Are you going long, meaning buy, or are you going short, selling? If you are in futures, you can trade the market in all directions, whether if the market is dumping or is pumping. When the market, we are expecting the market will pump, then we go long, meaning we buy, and expecting that the market will go up. Then when we are expecting the market will dump, only in futures that you can, when you expect the market will dump, you go short or sell. So that as soon as market is dumping, you will be getting massive profit depending on leverage you use and the amount of initial deposit you use. So you can open trade futures in all directions, whether upward or downward. Do you understand? So maybe you want to use your whole balance. Maybe you are opening short position, or based on the chart. After studying the chart, you see that it will continue pumping up. based on the technical indicators. So you can come and say, let me use 50% of my balance based on this 10x leverage, then go long using limit order, using this price 1.35. As soon as it retraces back and drop to 1.35, the market will execute your order and buy forward. But now the price doesn't come down. As soon as it comes down to 1.35, the market will buy it forward. But if you say this is within the entry point we have given you, you can easily change this to market order and click on buy. Maybe using 25% of your deposit, click on buy. Look at, you already buy. This is your position. Look at, this is your position. So if you can see, I have already used the low leverage 10x and I only use 25% of my initial value. Look at, the liquidation price is 0.86 using cross leverage 10x. This is cross leverage 10x, cross margin 10x. I use cross margin, I use 10x leverage. That's what it means. And also, this is my initial margin. I only use 2.3 USDT of my real initial margin to open this position. Do you understand? Do you understand? And you understand the system have multiplied this 2.31 USDT 10 times so that to buy and bought this 16 phantom coin for me. So this is my entry price 1.338. This is my mark price. Mark price is the price, is the last price detected by the exchange in calculating your unrealized PNLs, profit and loss. The last price detected by the exchange, you understand, in calculating your PNLs is called mark price. You understand? Entry price is a price that you buy, that you enter, that you open the position with, whether you are going up or short or long. And liquidation price is the price level when the market is not going against your direction. As soon as it hits the liquidation price, the automatic position will be closed automatically and it will turn to zero. Do you understand? So this is it. So you can cancel. For example, you have seen that you are getting massive profit. You have seen maybe 200%, 100% here, and you see your unrealized here. You want to take your profit, just click on close and close the position. You will see that the unrealized PNL will become realized. Realized PNL is the PNLs that you close your position. The PNLs, the last PNL calculated as you close your position is called realized PNL. But any PNL that you have seen while your position is currently on is all realized. Until when you close your position, the PNLs that was last calculated is called realized PNLs. Do you understand? So that's it. So you have to take care of what we are doing. So I actually show you how to prevent yourself, because the most disheartening things in futures market is actually liquidating your positions and your balance will return to zero. So make sure you trade wisely. And also, as you can see, let me give you an example of our previous signals. This is daily crypto from VIP. This is a signals I have given. And go USDT long setup. When we say long setup, it means you buy in expecting the market will go off, and we have short setup. Do you understand? So look at it. Entry point 0.9 to 0.94. So let me use this 0.9 to 0.94. Let me use. So quickly come here, come to the asset, right, and go here. Look at Algo USDT 0.9 to 0.94 is still within the buy zone. This is 0.93. It's not more than 0.94, so I can still buy. Then I am the one to choose the leverage factor that I will use. Let me use 30x. If you are using the higher leverage a little bit, to make sure you use small initial deposit of your balance, so that your liquidation price will not be so close to your entry point. So this is the available USDT, because I already have an open position, and you see the available balance is changing because I'm using cross leverage. So if I get massive profit here, it will reflect in the available balance. If I get a loss, the balance will be reducing. Do you understand? So because the cross leverage is using my entire balance of futures, in calculating liquidation price and profit and loss. So let me open another position with algo, because I told you that with futures you can trade futures with less than $1, even $0.5. Do you understand? Top level of this $7. So what you need to understand, since I'm using the cross leverage for algo, let me buy algo at this market price because it's still within the entry point. This is a signal from my VIP. When the price is between 0.9 to 0.94, you buy. You understand? So it's still 0.93, it's still within the zone. So you can say click. I use cross leverage again, 30s, or I can even say let me use the isolated leverage. When you are using isolated leverage, don't be actually too greedy. Make sure you use the small leverage factor, maybe 5x to 10x, depending on your maximum balance. So maybe let me say use the 50% of my or 25% of my or 50%, depending on how much balance you have in your futures account. Because the higher the balance, the more distant it will be between the liquidation price and the entry point. So let me use the 25% and open the position using 11x. So success. So this is position. I have two open positions. This is algo. As you can see, the liquidation price is 0.8594. You understand? And the also entry point is 6. This is the margin that I have used. You understand? This is also the type of margin is isolated here. Then the leverage I use is 11x. This means that this balance, even if algo have dumped towards 0.8594, only this 1.75 deposit will be liquidated from my balance. It will not touch the remaining position. But let's say if this one is pumping algo and this phantom have dumped down to 0.97, which is the liquidation price, it will close all other positions and my balance will return to zero. Do you understand? That's for cross leverage. So always when you open futures account, make sure you monitor and watch your liquidation price. In account that you don't want to close your position and the crypto is close to your liquidation price and is dumping toward your liquidation price, you can quickly transfer. Do you understand? You have to buy more assets or ask someone to transfer assets from you so that you can check transfer, then maybe transfer the assets to your spot wallet. After being spot wallet, then choose USDM futures account, then transfer from spot to USDM, select USDT. In as far as you have enough USDT, any amount of USDT in your spot, you can transfer them back to your actually the USDM does futures account. So once you transfer it, if you are using cross leverage, you will see that the liquidation price will also go down again because of the balance you have increased. Do you understand? Because the higher the balance you have, the lower will be the liquidation price. The more distant will be the liquidation price to your actually entry point. And also I have open position. I have never set take profits. For example, this is the take profit 1, take profit 2. You should not be too greedy. Always our past 3 targets are the short-term targets. For example, let me use the second target. When I achieve the second target, I am okay for these signals. So let me see. I'll go. Let's see. So 0.99. Look at it. I will get $1.1 because I already invested $1, 1 point something dollar, and with just this simple move from 0.93 to 0.99, I will get $1. At least I achieve. What if I said that I have invested $50 from this move to this move? I will get another $50. At least this is a good gain. So And you can also use our third target as your target, maybe 1.25. So look at, if it reach 1.25 position, my gain will be 6.5 USDT. So what will be your stop loss? You already know your liquidation price is 0.8 something. So our stop loss is already been given also, which is 0.88. So 0.88. The important of stop loss is that in as far as the price does not hit stop loss, the actually signal is still expected to work and hit all the target that are given. Do you understand? So that's why you must make sure that when you open any position, your liquidation price is supposed to be lower than your stop loss, so that, because the futures can hit the liquidation price and close entire your position, and the liquidation price is always might be above the stop loss, and this is wrong, because we calculate stop loss from technical indicators and our technical analysis, because if the signal never hits stop loss, it means that the signal is still intact and it can work. Do you understand? So make sure that your liquidation price is very low. This is one of the safest thing in trading futures. You will get huge amount of money if you actually follow this risk management techniques. Thank you very much. If you have any questions, you can ask. For example, you have said your take profit and stop loss, click on compound. That's it. You understand? Look at, you can always view it position TP/SL. You can come and edit it. For example, it will hit, if the futures hit 0.88, your loss would be minus 1.15. If the futures hits 1.25, your gain will be 6.5 USDT. So you can trade, you start trading futures actually with small balance. At least I advise you to at least use $20 as a start off. $20, $30, but make sure you use the low leverage, and make sure you are using the low leverage, and also the small. Don't use all your balance in trading it, maybe 50%, 25% of your balance. This will help you actually your position to not be liquidated, and always you should be monitoring the trade. You may not hit all the target. Once you made the first and second target or third target, you can take your profit and go. Thank you very much for your listening ears. If you have any question, you can drop it. Thank you.